Hello and welcome to Tax Matters. Brand new month and actually the 8th month of the year 2021. How time flies. On January 1st, 2021, the Finance Act 2020 came into effect and has guided tax administration in Nigeria for 7 months now. And so we decided to do a mid-year review. How have the far-reaching provisions in the Finance Act 2020 and maybe the Finance Act 2019 before it impacted on business activities and tax administration in Nigeria? Tax Matters spoke to tax advisors to find out from them what they observed with their clients with regard to the Finance Act 2020 and, of course, how the Act has impacted their own practices. The tax advisors will also be talking to us about Tax Pro Max, the homegrown, truly, fully end-to-end tax administration solution introduced by the FRS on June 7, 2021. Come along with us on this exciting journey.
Every day, my people dey for work. Some dey do office work. Some get them own business. So all of them want good road. Constant power for better life. Whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
We want to begin by refreshing your memory with regard to some of the highlights of the Finance Act 2020. Just a few. In the area of value-added tax, the Finance Act 2020 abolished VAT on land sale, land transfer, and rent. Still on VAT, the Finance Act 2020 also abolished VAT on hire, rent or lease of tractors, plugs, and other agricultural equipments. And of course, no VAT on flight tickets. Still in a bid to promote agricultural business, the Finance Act 2020 introduced a tax-free period of 4 years for small and medium-scale agricultural production companies. Companies operating in both the oil and gas export-free zone and the export processing zone are now required to file tax returns. The Finance Act 2020 exempted minimum wage earners from pay as you earn. Compensation for loss of office up to a maximum of 10 million naira was exempted from capital gains tax. There are many more. Now to our guests. Dr. Yemi Sani, a chartered accountant, chartered tax practitioner, is a member of council of the CITN. He is also the current chairman of the Lagos and District Society of the CITN. The Finance Act 2020 and the Finance Act 2019 before it both have far-reaching provisions affecting tax administration in Nigeria. Now, how have these two acts affected the business operations of your clients and, by extension, your practice, your tax practice?
We all know that the Finance Act 2019 and 2020, they came into being in order to address some of the ambiguities we have in the in certain provisions of tax laws and to provide clarity. Also, it aims in providing fiscal relief to taxpayers. Some of the advice given to the clients are: one, we advise our clients to ensure that they file their returns as and when due in order to avoid paying penalties and interest, that are avoidable. Also, we ensure that they make the relevant payments of their tax obligation in due time to avoid penalty payment as well. Most of small and medium scale enterprises, you find out that some of them don't, even the big ones, they don't keep proper records. So we advise them to keep proper record, because if there are disputes in any tax obligations, right, the only thing that will help you out to be able to explain yourself is keeping proper records. And also, there are certain times that there will be transactions that are hazy, that are not so clear, right? So we advise our clients before they embark on such transactions, once they tell us, because they need to know the tax implication of that the transaction. So where there is no clarity on the tax implication, we advise them to let us know so that we get proper clarity from the relevant tax authorities, and that has really helped a whole lot of them in just not having so much tax problems.
Mr. Albert Folorenshaw is the managing consultant of Pedable Professional Services. Mr. Folorenshaw, in fact, was one of those who worked behind the scenes to bring the Finance Act 2019 and 2020 into being. How have the two acts affected the business operations of your clients and, by extension, your tax practice?
As a tax practitioner, you have to be alive to all of the provisions, because call can come from any of your clients in the telecom, in the finance sector. One controversial issue that is there now is the fact that when you have exempt income, the expenses that are related to the exempt income must be excluded from your allowable expense. And so that has been an area that needs more clarification. It's been interesting for tax practitioners because there are quite a number of things that have changed, and which we expect will still change, will be amended. A lot of provisions have become outdated. Even the capital gains tax, amendment relating to payment for loss of office. Okay, quite a number of those provisions we require, we expect should be clarified. Again, we have gain on sale of shares, in Section 30, which was brought in 1998. Okay, there is a need for an amendment there because, if you do a joint reading, it says gain on sale of government security, government bonds, and shares. So it tends to, some tends to interpret it to mean that those are all totally for government, and it is not true, because if you look at the provision that came up in 1998 that exempted, before the amendment of Section 30, was only Treasury bill and co. Stocks and shares are not included. So it means that any form of sale of shares, okay, gain on sale of shares, whether you buy in the morning and sell in the evening, or buy in the morning and sell the following morning, it is still gain on sale of shares, okay? And today, except the law is amended, is exempted from tax, okay? Of course, Section 32 has also been amended, particularly where there is reorganization and restructuring of a company. And so what that provision has said is that before that exemption of VAT and capital gains tax can be exempted, if a company is restructured, the companies must be related, and that relationship must have been at least for 365 days. And there must be no disposal after that consummation for another 365 days, otherwise the exemption will not be granted. Those are provisions that companies now have to monitor. If you want to do any restructuring, definitely, and you want to incorporate a new company, you must wait for at least 365 days before you consummate such restructuring. Those are challenging provisions that taxpayers need to take into consideration, even when they are in a hurry to consummate any restructuring. Otherwise, you will not take the benefit of the incentive. The same, we can also talk about the issues around the free trade zone, okay, which has become a little bit more controversial. What provision of the laws, the amendment is the fact that those companies are now to file returns. If you operate within the trade zone, you have to file your income tax returns. That does not mean that you should be filing VAT returns, payee returns, withholding tax returns. No, okay, because that would just, change the whole, nomenclature around companies operating in the free trade zone, because they are assumed to be operating outside Nigeria, and so we cannot treat them otherwise, because a lot have gone into that, area purposely to take those incentives, and so we cannot change it halfway. But of course, filing returns means that at least federal government will know exactly what is going on within those territories.
Could you please share with us the advice you now give to your clients based on this, the amendments in these two acts, if you don't mind?
You want your clients to be compliant, because the issue around penalty and interest is huge, okay? And for me, that is even more important for so many clients now. Apart from looking for loopholes here and there, they want to be compliant. They want to take advantage of the provision, paying 10% penalty, 19% interest, for failure to file returns or for failure to compute your tax properly. The tax authority can also trigger investigation now if they think there are issues that have resulted into such trigger. Okay, you want to be sure that that does not happen to your client.
Alhaji Lasisi Fashihu, chartered accountant, chartered tax practitioner, is tax advisor to top blue chips companies. Would like to know what kind of advice you've been giving to your clients with regards to the Finance Acts.
No, the advice I've been giving to my clients is that they have to comply strictly to the provision of the Act. For instance, now they have to make their records available. For instance, now for those of them who can get the benefit of getting a bonus, we have been advising them that look, your tax, you can start paying it as maybe for company that having that 1st December year and now, you can start paying your taxes as from January of the following year, so that you can get the 1% bonus from the incentive given in the Finance Act. Because if you file your returns on or before 30th of June, you are supposed to be given a 1% bonus. So we have been advising them. Then those people that their turnover is below 25 million, we have been advising that they must file their returns as and when due. Both their VAT and their company income tax, they must file it as a due date. If they don't file it, we have told them they will impose penalty on them. And the Finance Act has increased the penalty. For instance, now in the old Act, if you don't file your returns on due date, you pay 5,000 in the first month. Subsequently, you pay 5,000 naira. But now, the failure to file on due date is 50,000 naira. Then in subsequent month, you now pay 25,000. So if you don't want to pay that penalty, you have to ensure you comply with the provision of the law.
Mr. Gregory Da Silva, legal practitioner and chartered tax practitioner, was at a point one of the legal advisors to the CITN. An accomplished tax consultant, Mr. Da Silva is also a trainer of tax practitioners. The
Act contains some provisions which enhance ease of doing business in Nigeria. Now, the impact of COVID-19, pandemic on business activities and the increased need for adoption of virtual and electronic processes in government administration informed the introduction of some electronic initiatives. For example, FRS can now serve notices of assessment for companies' income tax electronically. Also, the taxpayers can also object electronically. So, and then payments can also be done electronically. And you will agree with me that this has given some comfort and ease to operations of business, especially tax administration in Nigeria. And of course, another important introduction that has been made in 2020 vis-a-vis that of 2019 is the new paragraph that has been introduced into the 5th schedule of the FRS Act, that is FRS Establishment Act of 2007, and it has to do with conducting hearing remotely by the Tax Appeal Tribunal. So it is now possible for Tax Appeal Tribunal to have remote hearing. So that's one other advantage of 2020 Finance Act, and also it makes business easy, if not easier, for taxpayers and for people who are into business. Then the exemption of small companies from payment of tertiary education tax. Now, when you look at the 2019 Finance Act, it only granted exemption from paying companies' income tax to small companies. And when we say small companies, we are referring to companies whose turnover is 25 million or less. So what 2019 Finance Act did then was to exempt them from paying companies' income tax. But 2020 Finance Act went further and also exempted them from paying tertiary education tax.
Thank you for staying with us. The second part of our interviews with the tax advisors was on the newly introduced tax administration solution, Tax Pro Max. We sought to know from the tax consultants what the experiences of their clients have been with Tax Pro Max in the last 2 months, and of course, by extension, its impact on their own practices. But first, some of the features of Tax Pro Max. Tax Pro Max allows for online registration as a taxpayer, online filing of returns, online payment of taxes, immediate issuance of receipts, and the printing of electronic TCC. In just 2 months of operation, Tax Pro Max has proved to be user-friendly, cost-effective, secure, and very convenient. Tax Pro Max allows for input VAT to be automatically calculated and recognized, while also allowing withholding tax credit note to be used to offset companies' income tax liability. Under Tax Pro Max, only one single teller is required for all payments. It is called single credit, multiple debit. To confirm the workability of the Tax Pro Max, we performed just 2 of the numerous tasks doable on the platform. To file value-added tax returns, the taxpayer is required to first log on to www.taxpromax.frs.gov.ng and then click on Login as displayed on the screen. The next step is to fill in password, email address, and password, and then click on Login. When you log in, the system takes you to the next page, which will display different tasks the taxpayer may wish to perform on the home page. From the dashboard, click on Taxes Due, which will display the different tax types the taxpayer needs to file and pay. When the taxpayer clicks on the tax type under the taxes due, in this case the VAT, it displays list of tables, and under the action column, click on Process, and it will take you to Schedules. The system will display list of schedules on a page with status marked S or ticked if completely filled. Then click on Schedule marked S to proceed and fill in the necessary information. When the taxpayer has filled the necessary information, the next step is to click on Submit, and that's all. To file withholding tax on the Tax Pro Max, The taxpayer is required to first log on to www.taxpromax.frs.gov.ng and then click on Login as displayed on the screen. The next step is to fill in email address and password and then click on Login. When you log in, the system takes you to the next page, which will display different tasks the taxpayer may wish to perform on the home page. From the dashboard, click on Group Taxes, which will display the different tax types the taxpayer needs to file and pay. Under the list of group taxes, click on Withholding Tax. Then it takes you to the next page, which requires you to take necessary actions. For the retiring currency, click on Naira, and for the retiring withholding tax type, click on Others. Then download sample templates to fill in the details of the withholding tax schedule to be uploaded. After filling in the details, in this case we are filing and paying on behalf of a third party, save the documents for upload. Then go back and click on Choose File and upload the withholding tax schedule and click on Proceed. The system takes you to the next page, which displays the details of the uploaded document, and then click on Proceed. The system then takes you to the next page, which will display the withholding tax amount you are to pay and the different payment options. Then click on Remitter, and that takes you to the next page, which will generate your unique payment reference number, PRN. Then click on Pay Online if you wish to pay online, or click on Print Remitter Invoice to pay in the bank. See, Tax Pro Max is working. Now to our guests. A few excerpts.
The Tax Pro Max was developed, in line with the FRS mandate by the Finance Act to automate the tax administration system. Okay, and it is an online tax platform. Okay, developed to create seamless administration of tax for both the tax authority and the taxpayer.
Tax Pro Max is a laudable initiative of the FRS. In introducing this kind of application, right, it should have been done simultaneously with the manual filing, you understand? So with more emphasis on utilization of the Tax Pro Max to file. And a certain time frame should now be given till all the teething problems that the Tax Pro Max comes with, is erased and addressed.
Another issue that we are having is that we have a problem, which is a real problem on we consultants. This Tax Pro Max has not given any consideration to a consultant, in the sense that anybody can just input the account on the system, then submit. There is no portion where a consultant will sign. There is no portion that the auditor will even sign the account. Now anybody, they may even file account that is not signed now by any auditor, because what we only need is that where is the account? You just input the figure on the platform. Then you now determine your tax liability. Then you now submit for payment. But there is no any portion where a consultant will sign that, look, I, Alhaji Fashion and Co. or LAFTAX Consultant Limited prepare this document. So there is a need to ensure that the consultant and the auditor's portion is given into the platform. For now, that one is missing. So then I've mentioned it before on the tax software update. It's not been functioning very well. So that one is very critical. With the consultant, we are complaining of that. There should be a column where a tax consultant will sign, whether he will put something there, period. But what we are now putting there, we only put our tax computation. Then if they are now saying that, okay, the letter of filing should be there, it's a different ballgame.
Call that self-preservation and you will not be wrong. The full interviews will come to you in the next episode. You must make it a date next episode. This same station, same day of the week, same time of the day. It is going to be awesome. Have a great week ahead. Bye for now.